Welcome. In this video, where does ZBCN coin want to go? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. Looking carefully at the chart, there is an important support zone just below the price, which has been tested many times in the past, and each time strong reactions have been received and upward movements have started. This support area stands out as a level that market participants watch very carefully and provides psychological confidence. When historical data is analyzed, every time the price touched this area, it either gave immediate upward reactions or recovered in a short time and continued its upward movements. This shows us that this level is strongly defended by buyers, and the price forms a base in this region. Support levels are areas in technical analysis where buy orders are concentrated to prevent an asset from falling more than a certain price. These areas are often seen as the market's breathing points, because at these levels where buyers are concentrated, selling pressure decreases and is replaced by buying. This particular support level fits this description. There have been many instances where when the price hit this area, buyers stepped in and regained control. Therefore, if this support zone is still in place, and the price approaches it once again, the chances of a similarly positive reaction are quite high. In technical analysis, the failure to break a support level despite being tested repeatedly increases its strength. These repetitions reinforce the willingness to buy and investor confidence in that area. The same is the case with this particular level. When the price reached this level before, the seller's strength waned, and the buyer's pressure caused the price to move upwards again. Given the current price position, the fact that we are just above this support zone creates a sense of confidence for investors and increases the likelihood of an upward reaction when the price approaches this level again. A support level is strengthened not only by the fact that the price has turned in the past, but also by volume support. If there have been large volume trades in this area in the past, and the price has been observed to recover quickly from these areas, this is technically a very valuable signal. Should the price approach this point again, it is highly likely that the same traders will similarly step in and push the price higher. Also, the wicks and spikes that have been formed by the price approaching this area in the past prove that this is a strong line of defense. Moreover, this support level should be considered not only as a horizontal line, but also as a psychological boundary. Supports, especially at certain numerical thresholds, are taken more seriously by investors. This is because such levels are carefully monitored by both individual traders who trade manually and big players who execute algorithmic trades. This increases the likelihood that buy orders will be automatically triggered if the price approaches the support zone again, setting the stage for the price to bounce off the support once again. Support zones are also important tools for gauging market sentiment. If there is an increase in volume before the price hits this level and momentum remains positive, there is a possibility that the price may move up, even without testing this support level. However, in the event of a possible pullback, if the price reaches this support level, given the previous reaction history, it is highly likely that investors will reposition and move the price up. Another important consideration is that this support zone is also likely to lead to a possible trend reversal. If the price rebounds from this level and then builds an ascending structure by making higher lows, it could be not only a reaction rally, but also the start of a new uptrend. In technical analysis, reversals from such strong supports are often the building blocks of new trends and generate very valuable signals for traders. But we can't decide the analysis with support alone. Let's look at other metrics. Stay tuned. Looking carefully at the chart, it is possible to observe that the price has been moving within a very prominent falling channel structure for some time. Such falling channels often represent corrective movements in technical analysis and are considered by traders as harbingers of potential trend reversals. As the price fluctuates between the lower band and the upper band within the falling channel, it shows that the market fluctuates in a certain order, while this structure also provides clues as to where possible changes in direction may occur. In this context, recent developments within the falling channel have started to generate positive technical signals. Of particular note is the strong reaction to the price's recent contact with the lower band of the channel. Such tests of the lower band are often areas where buyers re-engage, taking control from sellers and increasing the potential for upside potential. While this positive reaction from the lower band indicates that the falling channel is still valid, it also indicates that this channel structure will continue to operate for some time. This could guide investors in their short and medium-term strategies. The current position of the price points to a very strategic point. With the reactions from the lower band of the channel, the price has started to show an orientation towards the middle band of the channel. In technical analysis, The middle bands of the channel are considered to be both dynamic support resistance zones and critical thresholds for the direction of the price. If this middle band is crossed, the probability of the price starting a move towards the upper band of that channel increases significantly. For now, however, our focus is on the potential for the price to reach the mid-band, which the current technical structure strongly supports. In this latest reaction from the lower band, candle patterns have also generated positive signals. In particular, the green candles with bodies and the increased volume suggest that buyers are becoming active in the market again and taking these levels as an opportunity. This suggests that market participants see the lower band of the falling channel as an important buying zone. Such reactions are also strong signals that support the possibility of an upside breakout of the channel. In addition, within the falling channel structure, the price has been observed to move towards the middle band after reaching the lower band in a similar way before. This repetitive pattern is called pattern repetition in technical analysis and is very helpful for investors in making forward-looking forecasts. In similar situations in the past, there are scenarios where the price reached the middle band and then either returned to the lower band or sometimes continued to the upper band. Therefore, the current position of the price in this structure may be a harbinger of a very important movement. In this context, the mid-band of the channel is not only a target level, but also an area where market psychology will be tested. If the price has strong volume and momentum when it reaches this level may not be a stop, but a springboard. If the price consolidates and breaks to the upside after reaching this zone, the upper band of the channel, or even the off-channel levels, may come up as new targets. The fact that the price has initiated an upside move from the lower band of the falling channel suggests not only that the current decline is slowing down, but also that a potential reversal is at the door. Such patterns are especially common during periods of consolidation and play a role in the market's reorientation. If this move gains strength and the price breaks through the mid-band, one of the most optimistic scenarios within this channel structure may start to work. Falling channel patterns can often be interpreted as the end of the bull traps, where the selling pressure is starting to exhaust itself. A strong defense of the lower band indicates both a weakening of the current downtrend and the emergence of potential buying opportunities. Looking carefully at the MACD indicator, it can be observed that the indicator performs a crossover in the lower region. This type of crossover is often considered in technical analysis as a signal for a reversal in price action. The intersection of the MACD line and the signal line at the lower levels is often an early sign that bearish pressure is subsiding. The sell-off is starting to weaken, and buyers are re-entering the market. In this context, the MACD's positive crossover at these lows can be considered a very promising development in the current market outlook. Although the crossover is still below the zero line of the MACD histogram, if this upside momentum is sustained and the MACD histogram manages to break above the zero level, this could lead to a significant increase in the bullish momentum of the price. This is because a MACD crossing above the zero line is often interpreted in technical analysis as a confirmation of a trend reversal. With this transition, investor confidence increases, volumes expand, and the likelihood of a permanent upward movement in the overall structure of the market strengthens. Especially the fact that similar MACD structures have been seen at these levels before suggests that this scenario may repeat in technical terms. We should pay attention to MACD intersections. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.